Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Mat Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. We recently had Vondell Burns on the show of Thankless Productions, Chip Gabrino, a local real estate entrepreneur and restaurateur, Brooke Reuter talking about contract for deed versus lease to own properties. We also had Will Gilbrecht from Franklin Heating and Air in Northwest Arkansas discussing the difficulties of growing and scaling a heating and air business. Very interesting show where we talk about why home warranties don't work for rental properties. Today's episode is brought to you by Chris Lyle State Farm. Chris Lyle State Farm helps you protect your most precious assets and investments, whether it's your home and auto, investment, rental properties, or other valuables. Call Chris Lyle State Farm for a quick and painless phone call to potentially save you double digits on all of your insurance needs. Visit diallyle.com or call Chris's office at 918-878-7771. He's licensed in a bunch of states around here. Today's episode is also brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Listen, Alex, you know as good as anybody, because we did this together, how hard it is to line up contractors that are honest, reputable, fair, and get a make-ready done or a full unit conversion done. It takes a ton of time. Contractors don't always execute as they propose they will, and they're busy, drags on forever. All that leads to lost rental income and potentially a delay in the sale. And if that sale happens 6 months or 8 months after you expected it, then you could have a situation like July 2022 to call it March of 2023, when interest rates have taken 8 or 9 or 10 consecutive rate hikes, or hikes, I should say. So it really can be painful. At Keyrenter, we line up our dedicated vendors so that turns can happen super quickly and we get more money back into the pockets of our owners, I should say. And that is why it doesn't matter what rental you have, a single family home, a condo, townhome, apartment, we've got the management solutions that you need. Go to keyrenterpmc.com or email us at info@keyrenterpmc.com. Before introducing today's guest, I want to give a huge shout out to Dave Haig, who's a local contractor doing great work. He introduced Alex and I back in the day, and we've had a bunch of years working together, and it's been really fun. You're going to hear all about that today. Alex Abbott is our guest today. Alex is a real estate investor with nearly a decade of expertise and a comprehensive knowledge of diverse property and deal types. He's engaged in successful ventures, including condos, single-family residential units, duplexes, quads, fix and flip projects, buy and holds, as well as industrial and hospitality properties. It's that versatility that has allowed him to seize opportunities and create value across various niches within the industry. His business is LionsGate Capital. That's lionsgatecapital.net. Boom. Alex Abbott, welcome to the show. How are you?
Awesome, Matt. Thank you for having me. Super excited.
I did just shout out Dave Haig, but I want to talk about this little story. Can we just tell this story real quick? Or is Dave going to be upset when he comes on the pod? He's going to be like, oh, I can't believe you told that story. Is he going to be upset or no? Oh my God. So you're just telling me, we were talking about Dave and you were saying that he had this crazy situation happen. Tell me a little bit about the situation.
Yeah.
First, who's Dave? Who's Dave? Let's intro him.
Yeah, Dave's an old friend of mine. He actually introduced Matt and I when I was looking to go remote. I'm based in Colorado, and I was looking to do some work in Oklahoma. So Dave's an old high school friend of mine, done construction in Oklahoma, and he introduced me to Matt. So we were doing some construction on a project, and I had Dave helping us out and working on some doors. And one of his subs had some funds to go buy supplies, and ended up taking those supplies and maybe partying a little bit too hard. Staying up
a bender
of benders, and found himself in a situation where he decided to steal a vintage Army vehicle that is a personnel carrier, a very large Army vehicle.
Military cargo truck is how the news puts it.
Yes. Drove this around Tulsa for a while until it ran out of gas on the highway, until he was apprehended. And it's quite a situation there. And I found out a little bit later, one of my cousins is a highway patrol officer in Oklahoma and actually was on the scene there for the apprehension of him.
Okay, so you're telling me the story. We're like BSing about Dave Haig. You tell me the story, and I'm like, no way. This was a tenant of ours that when we found it, we were like, why isn't he paying rent? It turns out he stole this vehicle. So all I do is see a news article come in. The news title, and we can put it in the notes, is "Stolen Military Cargo Truck Recovered in Tulsa, Suspect Arrested." And so I get this on my like internal chat feed from our team. We're like, oh my God, here's what my tenant just did. And we're all going, cringe, this is terrible. And so you tell me the story and I'm like, oh my God, that was our tenant. I had no the idea that it was connected. What a small world of crazy people.
Yeah.
Oh
Totally.
my God. Oh my God.
And then we
Okay.
find out, my cousin was one of the ones that apprehended him. And so I got to hear the other side of the story about the pepper spray in the windows. And
He refused to come out of the vehicle.
yeah, he was.
I think he like, at first he was masquerading as, I mean, you can tell that this is not the current color of the military fatigues or whatever you'd call it. Like it's not a modern war vehicle. So you could tell that he wasn't like active personnel, right? But he was somehow, if you read this whole article, I think there's something in here. There's not that much in this article, but he was, our officers were lucky enough to, our reporting officers lucky enough were going to drive to his last known address. As they were driving, they saw the vehicle parked on the side of the road. So that's how they found him. He refused to come out. He used pepper balls and he was taken to the hospital for unrelated medical conditions. Oh my God, what a crazy story. Anyways, Alex Abbott, welcome to the show. Let's start by understanding a little bit for all of our listeners and viewers what your background is. And we're going to get into all the real estate stuff. But before you got into any of this craziness in real estate, what were you working on? What were you doing?
Yeah, so originally a software engineer by trade, focusing in quality assurance, software delivery. Had done that for about 15 years. I started investing in real estate on the side. I think similar to a lot of people that have a 9 to 5, just with that idea, I want to buy a second house or a condo, and I'm gonna just self-manage and rent that out and let it pay for itself. And the idea, I'm gonna put 20 or 30% down and just get it to cover its mortgage. So that's kind of where I started and did that with some of the money I had from software exits and things like that. And then just really wanted to learn how to scale. Really wasn't feeling like I was growing very fast, and seeing some other people that were more focused on real estate and growth. And I just knew there was more. So I started educating myself. And one of the things I read about and learned was, going remote and being able to manage remotely. So that was one of the big goals I set for myself in 2020, actually 2019. And I reached out to Dave Haig. I picked Tulsa. That's where I'm originally from. I'm now located in Edgewater, Colorado, which is Denver West. So when I went to reach out to Dave, he introduced me to Matt. And Matt, when I reached out, hadn't talked to very many property managers at the time, and a lot of the people I had kind of met in real estate were pretty new to it. And so Matt was one of the first people that I talked to that was really well educated on a lot of different aspects of real estate from an investor's perspective. And I remember getting off the phone with him and talking to one of my coworkers at, in my software job about, I just got off the phone with a rock star. I'm super excited. I'm building my team. My remote team is now started. I think I've got the first key player. And that was really where it started rolling for me.
Man, I was really good at BSing, huh?
Yeah. You said all the right things.
I just it was ChatGPT. I was like, what to say to a new real estate investor if I'm a property manager, and I just went down the keywords.
Yeah, and then the other thing was Matt just happened to be in Colorado. I think within a week or two of that first call, so we got to sit down and have coffee. Just meet in person. I think that was a big, for an investor going out of state, that was really important for me to have that FaceTime. So then a little bit later, fast forward to the spring of 2020, Matt sending me properties, mainly looking at trying to find a single family stuff. I was looking at trying to execute the BRRRR strategy. And this strip of duplexes came up from a wholesaler that was pretty rough, and we passed on it the first time. And it ended up coming back around because it was early spring of 2020. So the lending environment was changing. And if I remember correctly, I think someone else had it under contract, but their lending fell through because the bank stopped doing 100% construction loans at that time. And so I had to scoop it up at an 80%.
There were a bunch of things. I mean, we're back in the day, we were working with Case Capital. And I mean, they brought us a tremendous number of really fun, awesome deals. The challenge with the 4 duplexes, and we can get into it, was that I brought it first to Kurt, who's been on the show before. And his main fear, I remember going to look at it with him, and his main fear was that it wasn't going to appraise. And I called a friend of mine that's an appraiser, and they obviously can't do like a full appraisal for a friend. That would be a conflict of interest. But I was just asking him questions like, what do you think this would appraise for? And I think it had to appraise for like 500 as complete once, like, so that the bank financing would work, so that the construction lending on the deal would work. Because obviously the bank will say, okay, you're buying it for 200, you're going to put 300 into it in order to service the debt on 500 or on 80% of 500. It needs to cash flow this much. Rents have to be so much. And so we just needed to like understand all the numbers. And so in that conversation with Kurt and this appraiser, the appraiser like laughed. It was like, there's no way they're going to appraise for whatever, 125 a building, right? Which would have been 60 some odd dollars, 62,500 a door in that sense. And I remember just thinking, like, it just doesn't make sense to me that these wouldn't appraise for that price when they're done, because the rents will be 800, 900. It should work. But that really scared off Kurt. And he's just said it's not going to work. And so I think then it went under contract, then it came out for some reason. And I can't recall the details at this point, but then you and I were kind of looking at it again. And you said, yeah, I think this thing can work.
Yeah, I think you're right. And I remember now you saying that we got into a little bit of how do we manage the contingencies? Because I think it was a wholesale contract, and I think we ended up putting in a financing contingency and an appraisal contingency is basically all we had. And then we were able to move forward. And then I remember the appraisal came in, I think it was at 540, if I remember correctly.
Right. We're like, cool, we're in the money here.
Above what we were actually hoping for and expecting. And then we were like, wow, well, okay, we're off to the races.
Love it.
Yeah. And then, some of the other cool stuff you guys were able to help me with is providing some support through negotiating with the contractors. You guys provided a bid and ended up going with another contractor, which was probably ended up being a mistake. But
I remember talking to that other contractor, being like, how can you, like, we had our best, I would say our best, most fairly priced HVAC guy going in. So first of all, the duplexes were in super rough shape, right? I mean, one had burnt down entirely, or one had a pretty severe bit of fire damage to it. Half of it was totally in chars, and half of it, then you worry about the support of the rest of it because it's a duplex, obviously. And then I remember having Bob out and him giving us a quote and asking him like what kind of margin he was making on the equipment and on, it was ductwork that needed to be done because there was no central heating and air. And he was like, man, this is like about the cheapest I can do it for. Below this, I don't make anything. And as it stands, I'm making like $200 or $300 a unit. So when I heard the HVAC bid from the other guys, I was like, first, you should take this, Alex. Like, I don't know how they're going to make money doing it, but I think you should take it. Because I just can't, there's nobody that I know that can compete with this price. Ultimately, you can tell the story, but it didn't work out that well. It worked out 50%. And then the rest worked itself out over time. I do think it's also worth noting, like in this story, this is a story of perseverance from start to finish. You just persevered in every obstacle in a true, pure entrepreneurial way. Every obstacle that you faced and we faced together as a team was like, all right, it wasn't name calling and bickering and this and that. It was like, all right, what's our next step? How are we moving through this? We got to get to the goal. So I really appreciate that and respect that about you, because it was very partnership based and not adversarial at all. I mean, you could have looked at us and gone and said, this is your fault. This is this, but it was like, cool. This is an obstacle. Let's get through it. Let's get to the next spot. Ultimately, great story. We'll get to that point in a few minutes, but like it's a great exercise in partnership, I would say.
Yeah. I mean, agreed. And couldn't agree more. And yeah, just on the state of the duplexes, it was 8 doors total. So four buildings, all duplexes. One was rented. There's fire damage on, a couple units.
Mr. Dog Poo.
Yeah.
My God. Did he have a lot of dogs? Okay. Sorry.
All good. Uh, the city actually had a lien on the property, so Matt's team was even able to help negotiate that lien release with the city so that we could get through closing. Just, I mean, the things that the property management team, Matt's team, provided during that process is not the typical kind of stuff you can expect from a property management team, I'd say. Um, so kudos to you and
Thank
helping
you.
me through all of that. And I think everything was going smooth. We had the project started really well. I mean, we were getting lots of pictures going in, and then it was the beginning of really the hard parts of COVID, and so we entered into this construction thinking we were going to get it done in maybe 10 weeks. We had a fixed price, fixed time contract, which is that's why we agreed to move forward with it. Uh, and then, we were tolerant to some delays, and with COVID, we kind of had to be tolerant at some points, right? There was some workers on respirators and things like this that were very serious. And
Yeah.
um, ultimately, what ended up happening is we had some theft on the property, and that's really, I think, was the source of where the miscommunication started. And we found this out a little bit later in the litigation. One of the main problems of miscommunication was that the contractors had the addresses wrong on the units. So every time they were sending me a report on where this theft had happened or what had been broken in, they were actually sending me the wrong numbers. And so there was a lot of confusion because where the reports were coming from didn't line up with the other reports of
Right.
expenses and what was so that really led to a big communication breakdown because trying to get information, and then ultimately the contractor just stopped communicating and stopped doing work. Really, that's kind of what it came down to.
From the contractor's perspective, he's like, it's not my fault that stuff got stolen. I don't have any more money to keep paying my subs. So my decision is either like go bankrupt or go negative and pay you to do this work or just walk away from the job. Is that basically right? I mean,
Yeah,
contractors get in
and
this situation all the time. And this is why developers go bankrupt all the time, right? I mean, they underestimate what it's going to cost. They underestimate the timeline, and they have to then make a decision at some point. Either I walk away and lose everything I've got as a developer, or as a contractor, I lose my reputation, I lose my goodwill, or I go negative and I make it up on some other project down the road somewhere. Is that right?
yeah, yeah, and I think it's the communication too, right? So the theft I think happened in October, and there's two incidents. I think October, November. Um, And those at that point, we had been kind of loosely notified, but not given any idea of really what the impact was of the theft. We were told there
Yeah.
was some theft, some break-in, kind of left it at like, okay, it's the contractor's responsibility. They had full control of the property. So, we weren't monitoring their daily lockups or anything like that. So we kind of left it at their responsibility. A few months went by, and then they had stopped working and we were trying to get information from them, and that's when they demanded payment for the theft losses. And so, I looked into potentially making an insurance claim, uh, but there was no police report, and so we got into this conversation about, they really didn't provide a lot of information, and that's when they did end up filing a police report, but that's where the addresses were wrong, and that's
Mhm.
where really things started to get kind of shady because months had gone by. Now this police report has been filed, and now the addresses don't match. They've got a video that didn't match what the addresses were because of the layout of the apartment. So that's kind of where things really went south,
Yeah.
and they stopped working. And then on top of all this, about this time, this was in I guess April of 2022. Um, where the communication had almost stopped. It gotten pretty negative, and so we were trying to find out the situation with the inspections and permitting to see really where we were and if we could take over from have another contractor step in and take over. And at that point, we realized that the city of Tulsa had been hacked uh, through a ransomware hack.
Wait, but
Where
first, before that, we realized, well, two things. One,
yeah,
we realized that they had not pulled permits, right? I mean, that's how they ended up doing it so cheaply, is that they were not planning on pulling permits. or I think they had a contractor doing the work, but he didn't want to pull the permits because it would have cost extra money. And we were like, no. First, we found out before, like, first, you've got to be pulling the permits so that you can do this work and get it inspected, and we can get a certificate of occupancy or whatever is required for actually putting somebody in, final building clearance. But the second thing is they didn't have builder's risk insurance, which was the big thing. We were like, hey, this is your responsibility. I think the contract that we signed, that you signed, said that they would carry builder's risk, and they didn't. And builder's risk would have covered the theft of the materials on site, but didn't, because they didn't have builder's risk. And they admitted that. They admitted as much. And so that was a big sticking point where we were like, hey guys, this is your responsibility. The contract right here says that you have builder's risk and you don't have it.
Yep.
And that was ultimately used in arbitration at some point down the road. Yep. But so then the city of Tulsa gets hacked. What a great time that was. And they had no information about anything, any submitted permits, any ongoing permits. They were requesting that we submit documents, go downtown and submit documents by hand with drawings and everything else. And God knows what.
And at that point, there was some record that a building permit had been, because they had some older records that you could access, but nothing could be updated. So there was some old records of a building permit being pulled, and then there were some failed inspections. So you couldn't really tell the status of what was going on. But, what we knew is that we didn't have gas meters on all of our units, right? And
right. That's right. We had to pass the HVAC, and we had to pass the gas pressure test before we could put gas meters on. That's right.
Yeah. Right. So that's, I think, where we were getting hung up is like, well, there's no inspections going on because we can't even get, the gas meters put back on. And that's really where that was a really big mess with Tulsa as well. I mean, I remember being on the phone with their office, and one of the ladies were super helpful. Everybody was super nice there. She told me to call her back in a couple of hours, and she spent, I don't know how much time, but a couple hours later, I spoke with her, and she said she'd been through all the paper files and that there was no new permit filed for, or no new inspection filed for that inspection.
Yeah, because they kept telling us that was it. They kept telling us, no, we've got the inspection pulled, and we're requesting it, but nobody will come back to us or whatever. There was like a bunch of back and forth, and we kept talking to O&G, and they're like, no, there's no inspection request that's been submitted. And they were like, yes, we've submitted it. No, we haven't. So we went back and forth until we realized that the ultimate underlying issue is that they had never applied for the HVAC permit, and they needed the gas that was running up to the furnaces in order to apply for that for the gas inspection. That's what it was.
Yeah.
My God, what a lot of craziness over a period of time.
Yeah, and that's so. Then we needed to kind of figure out another path forward, right? So then, Matt and I, that's when you and I kind of reconnected again about how to figure out moving forward. And like you said, had a discussion of how to move forward. And you introduced me to Tom Vogt, who is a stellar contract attorney. He deals with real estate contract disputes, construction contract disputes. That's his specialty. And anyone ever needs to get a lawyer, I highly recommend looking for one that is specialized in the area that you're looking for, not just a real estate attorney, but if you need contract, litigation, go to a contract real estate, contract specialist.
And we've used Jones Gotcher or Gocher, however they say it, for a lot of different stuff. Tom's team is super capable. We use Patrick over there, Patrick Colvin. We've used Tom extensively. They're great, and we've had successful outcomes in the work that we've done together, for sure.
Yeah, and so we did have a provision in the contract that we would attempt arbitration and litigation before going down the full legal recourse route. So we were able to settle with litigation and essentially get the original contractor to just get the permitting finished on the original permits, or the inspections finished on the original permits that they pulled, and get everything up to where we could take it over and finish it. And I think Matt's team at that point took over. Most of it was done, and this is also where we had to get some help to get our doors finished. And that's where we had the guy come in from who stole the army truck as we were wrapping all that up. So it was I mean, between, if COVID wasn't enough, right? Like
Yeah.
the hacking of the city, just so many little things, the theft,
Yeah. But
so,
ultimately it's a happy ending. So you owned it for roughly 2 years, 2 years and a bit.
yeah, almost 2.5. So we ended up finalizing that litigation and getting it kind of cleaned up. And then property management team took over at that point, got leased up, and we were really fortunate because of the timing of COVID and the rents. Just the rent demand at that point there was a lot of rent growth. So we were able to stabilize over a year, realize some of that rent growth over the next 12 to 14 months. And then we ended up exiting in October of 2023, or sorry, 2022. And the cool thing about that, I remember, I think I might have had a conversation with you first, Matt, and I said, hey, I think I'm going to, sell the property. I'm looking at selling it. I don't remember if I had a realtor. I mentioned it, but you're like, hey, talk to Yoni, and that's probably, it's just let him chat with you for a bit, because he has a strategy he likes to use with duplexes. And at that point, I hadn't really considered, Keyrenter, a lot of different single family stuff. That's how I had considered, that's how we kind of knew each other. So I didn't really understand how much of an investor network
Yeah.
Keyrenter actually had. Right. So I wasn't looking to Keyrenter to help me disposition the asset necessarily. And after talking to Yanni and realizing he had a lot of experience with duplexes and commercial, and understood basically how we could have multiple exit strategies, because duplexes you can kind of piece off, and you can sell one as a comp and go the single family route and sell with residential comps, or base it on the NOI and cap rates. And so ultimately we went the cap rate and NOI route to exit. And before listing, the pre-listing package went out to your investor group, and I think within 5 days we had 2 hard offers.
Wow.
So we had I think we had a counter within 2 or 3 days, and then a second backup offer within 5. So we were in a really great negotiating position. I mean, I had priced it pretty well to move, but I honestly didn't expect it to get picked up before going to listing.
So ultimately, I'm just doing the math here. I mean, I think one of the beautiful stories of buying, repositioning, and selling real estate is that you can make a good living, you can make a good profit, and then somebody else actually has the ability to come in, do a little bit more work, and have a good investment also. So this thing does $7,500 of income right now. So since you sold it a year ago, we've continued to bump rents. We went from, I think we started them at $825, $850 when you were doing them. Now we've gone up to 900, $925, $950, and it will be a good investment for somebody else. You made, and we can talk about numbers, you made a bunch of money doing the hard work, right? This is you cashing in on the tenacity and perseverance of doing the deal. And you clipped a coupon on the time that you spent, the energy and the capital that you invested, and somebody else will come in and buy it. To get 1% in the interest rate environment that we were still in last, October, call it, now we've had 11 consecutive rate increases, but back in October, they just started. Somebody else will have a good 5-year run at low interest rates and be able to capitalize on making in excess of 1% of the asset value every month in revenue. So a beautiful story for everybody.
Yeah. And I love a couple other things that I love about this, as far as the numbers go, is, when we picked it up, right, I think the rent was $700 on the single unit. So I'm pretty sure it was pulling in $700 a month, right? So we took that property and literally 10x the income from it. And what's interesting about that is when we talked about the appraisal, the appraisal was done as a single family appraisal. So it was done off of comps that had sold, some similar comps, some duplex comps that had sold. And so when we went in, the price value for that property was based on single family comps. And when we exited, it was valued on the NOI and the cap
Right.
rate. So it was entered as a residential, essentially, valuation and exited on a commercial valuation, which also helped those returns.
Yeah, beautiful. So how much did you end up returning percentage wise? You can talk cash, real hard dollars. You can talk percentages. What was your return over the course of 2 years or two and
It
a
was
bit?
roughly, for the annualized, it was roughly about 28%.
Got it. So you made 28% each year for 2 years that you owned it.
For 2.5 years.
And then I'm sure your accountant did some fun stuff where you arbitrage tax and you took depreciation, and then ultimately you had to what do they call it? Reclaim that depreciation. But you take the depreciation against today's income, and you do the reclaiming of that. What do they call it? Forgetting now. When you have to repay. I mean, if you depreciated it heavily, you have to repay that when you sell it. But ultimately, you do that at a 20% long-term capital gain. So it's basically a 15, 20% tax arbitrage play. So that's a cash on cash return of about 50% over 2 years, with 28% annualized or whatever it is. And then in addition to that, all the tax implications that you benefited from. And
yeah, the tax, I mean, that's another thing, right? So I said, Matt, I need to figure some taxes out. I need to get a better, a tax person. Do you have anyone that's in Oklahoma that knows, real estate, Oklahoma tax stuff? And Matt actually turned me on to CCK, right? And
yeah,
that's
love that.
I started using CCK. So they, one of the really cool things that we were able to do with this property, because of the level of renovation that we did, we actually did kind of almost a reverse hybrid cost seg study. So instead of having to have an engineer come in, and for those of you that are not familiar with cost segregation, it's a tax saving strategy to use accelerated depreciation across different components of your asset that have different usable life. So, for instance, your carpet may depreciate at a faster rate than your roof,
Right.
or this.
So for the carpet, if you say it's got a usable life of 3 years, you take the cost of that carpet and you depreciate it over 3 years instead of over
Correct.
20, which might be the roof or whatever.
Right. And then you might have an appliance that's 7, some blinds that are, 7. So
Yeah.
we were able to work with the accounting firm to take all the construction itemized lists and get all those appropriately categorized for the IRS, so that we essentially used it like a cost seg study to do accelerated depreciation and forget what it's called, but it's yeah.
And the 100% accelerated depreciation, or there's like 100% bonus depreciation. That's
Bonus
probably
depreciation,
also an option. Yeah.
Yeah. So, I mean, the things that I was able to learn as well from CCK and the tax strategies that they were able to help us implement, my wife as well, helping her become a real estate professional and understand what that does.
Holy grail.
Yeah, and it was really amazing because during this whole time, I still was working my full-time W-2 job. So, having a real estate professional spouse and having W-2, this bonus depreciation actually helped us offset some of the tax burden from my W-2 income, which was
so
amazing.
Awesome. Yeah.
Yeah.
So you've done all this. You've done this awesome deal in Tulsa. What happened next? What'd you move into? What are you working on now? Tell us a little bit about 2023 story.
Well, so, as we talked, kind of the entry into that set of duplexes was a single family entry. And over that project, I really had to educate myself on the differences between the single family, the residential world of real estate, and the commercial world of real estate. And through that, I've switched my focus to mainly focus on multifamily real estate now and syndications. So one of the things I would talk about with the numbers is, I remember kind of later towards the end of the lifespan of my ownership, we were looking at a tenant's unit that had a washer and dryer that they were renting from some rent to own or temporary rental place that was not even working. And so we talked about putting a unit in, and I remember thinking, okay, if I do the ROI on my investment and I look at this like a single family comp and, comps over here, maybe if I put $2,000 into this washer dryer setup, I'll probably get 100% return. I'll probably make the property worth about $4,000 more. So it was a no-brainer, right? And then I started looking at that cap rate evaluation of that same $2,000 expense and realized I think we were going to try to get, it would have been about $60 a month is what the current tenant was paying. So I was expecting about 50 of income after expenses, which is about $600 a year. I think we had that at roughly a 6 cap. So I think that same
multiply that
$2,000
by 18, multiply that by 5, 18% 6 cap. So $600 times 5 is $3,000 of value, basically.
Well, actually, from the $6,000 a year, you take that by divided by 0.06 for the 6 cap, so it'd be 10 grand a year.
6,000. Wow, holy moly!
So the value essentially was either the $2,000 expense was either 100% return on the single family valuation or a 500% return based on the income valuation.
Yeah,
commercial
awesome.
valuation.
So that got you thinking. I need to be involved in multifamily.
Yeah. So hey, how can I do that 8 times on every project, right? Instead of just once.
Yeah. So what is it with LionsGate Capital Partners? Is that what you're focused on? Doing multifamily investment and trying to figure out the syndication model?
Yeah, correct.
Love it.
So right now we have a property under contract in Lakewood, Colorado. It's a 9-unit apartment complex.
Beautiful.
We're in the early process now of inspection.
And will that be a traditional GPLP structure?
Yep.
Great. How do people find out if they want to invest and understand more about that deal? How do they find you?
They can reach out to me at my email at alex@lionsgatecapital.net. And they can also join my newsletter at lionsgatecapital.net.
Love it. Is your anticipation for the future to be part Oklahoma, part Colorado, opportunistic where you find the right deals? Or do you have a geography that will you stay in Lakewood? Will you stay in Lakewood is Western Denver, I guess, West Denver. Will you stay in that neighborhood until you can't find any more and then move to other parts of Denver?
I'm actually planning to continue to look in both. The nice thing about operating in Denver and Tulsa and those 2 MSAs is they're very different characteristics for deal and market.
Right.
So for instance, if I'm working with a family office that has a growth bucket where they're not concerned about cash on cash or immediate returns, they may want to be in Denver on a development play. Investors that are more focused, retail investors more focused on cash, those short-term returns are probably going to be more interested in stuff that's in Tulsa. Just the way the cash flow better, appreciation, and risk is a little higher in Denver. So
what's the minimum check size that you're willing to accept as at LionsGate as part of a deal?
Typically, it's 50,000. They're sometimes 25, depending on the offering.
It can be really annoying dealing with a lot of people that have put in smaller checks. Folks generally like to keep check sizes bigger, just the fewer people that they're reporting to, and fewer. My personal experience is that somebody that invests $10,000 is probably going to ask a lot more questions than somebody that has invested $50,000. That's just I don't know if that tracks over time and population, but that's my experience.
And there's a cost to it too, right? So these are syndications. So we're talking about having to register with the SEC and filings in every state where there's an investor located. So there's a cost to it as well.
Yeah, for sure. For sure. What else? Who have you been following in the space? What podcasts do you listen to? What books do you read? Who have been some mentors of yours that other people can follow online, maybe to learn more about the general world that you live in?
I actually just got back from a conference this weekend in Orlando for Rod Khleif's Warrior Boot Camp.
Cool.
I'm actually I'm a warrior myself. I'm in Rod Khleif's boot camp. It's a great network of highly motivated syndicators and just real estate entrepreneurs of all kinds of talent.
What would you say is the best thing you learned from that conference?
Probably the network, just meeting so many people. There's so many talented operators. I mean, one of the presenters there, he's a lawyer that's just well established, really funny guy, super talented. Literally, like, I think almost 5,000 doors.
Wow.
That's under management.
Wow.
Billions of dollars represented there in assets under management, all in multifamily real estate across the nation. So just some really, really interesting people to meet, for sure.
Love it.
I think the other thing about that is Rod Khleif teaches mindset. And I do believe that, having the right mindset is super critical to success in this business.
And how do you, when you're faced with a challenge that's seems daunting or insurmountable, how do you refocus your mindset to be one that's positive and allows you to move forward with something instead of just succumbing to it?
Is remembering why you're doing what you're doing. Maybe if it's your friends or family or whatever it is that are those core values and your beliefs that keep you going through any hard challenge. That's really where you got to get back to, and writing that stuff down and committing to it and reaffirming it actually does work.
Yeah. I love it. Alex is a real estate investor with nearly a decade of experience and a comprehensive knowledge of diverse property and deal types. He's engaged in successful ventures involving condos, single-family residential units, duplexes, quads, fix and flips projects, BRRRR, which stands for buy, renovate, rent, and refinance, I think. My God.
Repeat.
And repeat. BRRRR, buy and holds, as well as industrial and hospitality projects. This versatility has allowed Alex to seize opportunities and create value across various niches within the industry. Alex, I'm so grateful that you came on to tell your awesome story. I love this story, one of perseverance and grit and true entrepreneurship. Grateful for you. If you want to reach out, you can certainly do so. LionsGateCapital.net. And you said Alex at LionsGateCapital.net is your email address directly, right?
Yep.
Love it. Alex, thanks for being on the show. Appreciate you.
Thank you, Matt. Thanks for everything.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.